Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 1st of June. I'm Daniel Lam, your host for the podcast. I've started my training for the Asian Games by playing this 6-game match, 1 game per week, against a strong Australian player who is working in Hong Kong. In game 2 earlier this week, he walked into a position where the computer judged as fine for him. However, the position was very familiar to me. It was my quote-unquote comfort zone, and I managed to score a fine victory. Now, investors have been in their comfort zone in US equities, especially in those mega large caps in the Nasdaq 100 index. These were stocks that have worked handsomely for them in the past decade, which took a beating in 2022, but now they're back with a vengeance. Yes, it is true that the Nasdaq 100 has reached some important level of resistance, i.e. around 14,500, where it is at the top of the uptrend, as well as a key resistance level since the start of 2022. In fact, most of the aforementioned stocks have made highs, but subsequently experiencing pullbacks with high volume. However, US economic data and company earnings have not been as bad as one would have been expecting, i.e. the numbers have been beating expectations. And because of that, many investors do not see any reason why they should be switching out of US equities, at least in the very short term. Now, if this pullback in Nasdaq 100 were to continue, you may see a scenario where investors could be sticking to US equities, but rotating into the lower beta sectors, such as US healthcare, for example. So now the next layer of this train of thought. What would it take for investors to be switching out of US equities into equities in the other regions? Well, like we described earlier this week, you need a change in the narrative, starting with a rise in US growth expectations and the lowering of economic expectations for the rest of the world. Then the price action may be reversed if data in the rest of the world starts to beat expectations again, and US economy underperforms relative to expectations. So potential factors that may cause the US economy to weaken would include the following, such as issues with commercial real estate, unresolved debt ceiling debate, or the Fed turning more hawkish. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.